very important for the attendees to connect and take the time to learn. Obviously, managing wealth is one of the most confusing things that someone can endeavor to do in their life, and it's one of the most important for succession, for value creation, for value capture. And so these opportunities create a place where people can be in a network of like-minded people and really dig deep into it and learn. I thought it was great. I think that I was surrounded by a lot of bright people from whom I was learning a lot, and I was happy to be included. There's so many things that I want to learn more about that it's a really hard question to answer. I think from what I heard, the succession planning was quite an interesting panel in terms of understanding how would you organize within the UAE. We do so much of our investment activity in our own confusing across many different jurisdictions, and that's what works for us for startup investment, but just for normal types of investments, I would love to learn more. So WOMENA is an angel group for women investors in MENA-based startups. And so we fund early stage technology companies, and our membership base consists of women, and a few men have snuck in, who invest in early stage technology companies and want to be part of its growth, part of their growth. We have seen an incredible explosion of interest in venture capital and angel investment in the past couple of years. I think one of the reasons that there is continuously money that pours into venture capital in the United States is that as an asset class, it consistently outperforms public markets, which makes up for the risk. Whereas here, for a long time, people were getting extremely high returns just in sort of traditional investments, and now that's starting to change. And so families and high net worth individuals and institutions that otherwise were quite comfortable are now looking into alternative investments. And so it is growing quite positively. And so I think we're very fortunate to be there. And also the ecosystem as a whole is becoming whole. I think one really, really indicative statistic is that in the past 12 months, there have been 22 exits. And in the past 10 years, there have been 36 exits. So the exit activity has gone like this. So, I mean, if that doesn't say something about where the market is heading for VC, I don't know what does. Angel investment is partially about hedging your bets. You invest in multiple startups in order to get the winner. You know, what you're looking for is you want to get a 10x return from one startup, and you might even expect the entire rest of the portfolio to fail or maybe give you a 1 to 2x. But it's really about investing in multiple startups, diversifying, mitigating that risk. And you have investors here who go, oh, how much money am I going to get back next year? What kinds of what percentage return am I going to see? And you go, no, it's not like this. Is invest in many startups, make calculated investments, but make those investments with that expectation that you're looking for a big winner. It's not the same as an SME investment. And so I think that this is the key point of education. It's not linear growth, it's exponential growth, but it's higher risk. I think another thing that I've seen as part of the learning curve is, and this is kind of true for emerging markets in general, that when you're investing, venture capital and angel investment, it's an ever-expanding pie. Investing in technology, you're investing in an ever-expanding pie. And so you don't come into it with the idea that it's a zero-sum game, that if this guy gets something, he's necessarily taking something away from me. You can also approach it that sort of Silicon Valley mentality is, if I do well, then my co-investors do well, my portfolio company does well. And so that mentality is something that I've seen that needs to switch a little bit, where people work to help each other more rather than think of it as competitive.